Hello everyone. We've come to the last episode of this mentorship. So, in this episode, we shall look at the engineered time and price model. So, we have the buy model and the sell model. So, this is what most of you have been waiting for, and I call this my holy grail. I call this the game changer. So, if you follow the rules that I will tell you today, if you follow the rules, you will find consistency in the market. So, every single day, price will be engineered to a specific level at a certain time. And when price is engineered to that level, price will drop or price will rally. So, what you need is to follow the rules. If you actually follow these rules, you will find the holy grail that you're looking for. You will find consistency and you will have your own model that you follow. If you don't see this, you do not trade. So, the first rule is that time. So, we trade within 2300 to 2:30 a.m. EST, New York time. So, wherever you are, calibrate that time into New York time. So, the first rule is time. So, this is the key. Remember, I told you price is irrelevant without time. I have a reason why I chose this time zone. So, in this area, price will be engineered to a certain level and price will reverse. And we use that reversal as our opportunity. So, the first rule is time. Remember the first example I gave you of the milk shop? So, consider that price is irrelevant without time. So, we wait for time. And the time is within 23 to 2:30 a.m. EST. So after that, we do not trade. If we do not see what we want, we do not trade after 2:30 a.m. EST New York time. So the first thing we do is we mark a line at 2300. So that is our engineered open price range. So the opening price of 2300 is our engineered open price. There is a way price will open at this level here. So if we want to buy, we shall buy below the opening price of 2300. If we want to sell, we shall sell above the opening price of our 2300. So 2300 is our engineered open price. So consider that, take notes, 2300 to 2:30 a.m. EST. So after drawing a line at 2300 and marking your 2300 open price, you define PDRs behind that line. So let's say you mark a line like this, then you look for PDRs to the left of that line. So you wait for price to trade into that PDR. When we open, specifically on the 1 hour, we use the 1 hour. So go to the 1 hour, mark a line, then to the left you look for PDRs. I will show you how we do that. Then when price is engineered to that PDR on the 1 hour, we drop to the M5. That is our time frame alignment. So when price is engineered to that level, every single day price will be engineered to a certain PDR. When it is engineered to that level, we look for a market structure shift on the M5. So we start from the 1 hour and we align it with the M5. So when we look for that market structure shift, After the market structure shift happens, our entry is within the shift range. So remember, we sell above the opening range, which is 2300 open price, and buy below it. So the 2300 is our opening range candle. So remember, I told you that we shall expose the Australian dollar. So these are the pairs that we trade. So we trade odd USD, and our take profit is always 10 pips. Then for GBP odd, we take a 15 to 20 pips take profit. So for GBP odd, I like to stop at 15 pips. Then for Euro odd, we take 10 to 15 pips. So imagine if you could get a setup 3 times a week, 4 times a week, or even 2 times a week. That is what we call consistency. So you could decide and be trading 3 times a week, 2 times a week, 1 time a week, depending on your grid. So follow these rules that are here, take notes, have them at the forehead, and you will find consistency. I tell you, this is the holy grail that you're looking for. This is the consistency that you are actually looking for. So the buy model. So when price opens at 2300, we mark the open price. Then we wait for price to be engineered to a certain level. This is an engineered leg. So price is trading lower to a 1 hour PD array. So this could be a fair value gap, a rejection block, or an order block. So this is an engineered leg. That is why I'm calling it engineered time and price. So when price opens, we mark the open price, then we wait for price to trade lower into a 1 hour PD array between 23 to 2:30 a.m. EST. After that, we do not trade. So when price hits that level, we wait for confirmation, which is a market structure shift. So when we break this last swing high, we wait for price to retrace into the order block, fair value gap, any optimal trade entry. We could use it and enter here for longs. So remember, our take profit odd USD 10 pips, GBP odd 10 to 15, 15 to 20, Euro odd 10 to 15 pips. So this is the buy model. So let us look at it in charts. So this is our first example, odd USD. So what do you see here? Do you see anything? So this is our session that we trade between 2300 to 230. So we mark those levels and wait. So this is the opening candle. It's a green candle, a bullish candle. So where is the open price? So the open price is here. So we mark the open price of this candle. The session closes here. So do you see any PD array on the left? So we have these levels here. So let us go and see. So do you see? Price opens at 23. This is an engineered move. So price opens here, trades lower. So we mark that open price. So price trades higher into this rejection block. There is a reason why price is trading here. This is an engineered move. So when price is engineered into this 1 hour rejection block that we marked here. So everyone knows how to mark these levels because we looked at them in the previous episode. So price opens, trades into that level, here. So when price trades into that 1 hour level, remember our higher time frame level is the 1 hour. We trade the 1 hour, then align it with M5. So when we trade into this marked rejection block, we drop into the 5-minute to define our entry. So this is our higher time frame level, the 1 hour rejection block. So price opens at this level here. So this is our engineered open price. So when price opens, remember we said if we are to sell, we shall sell above the engineered open price. So price trades higher. So after trading into this level, we break the last swing low before hitting this level. So that is a market structure shift. So that is confirmation. So after getting a confirmation, we wait for price to retrace back into the shift range. So when price retraces, we sell immediately into a fair value gap, into an order block, depending optimal trade entry, depending on your entry model. So when price shifts structure and we get a displacement, we wait for it to retrace and we sell here. And after 2:30 we do not trade, we just let the trade run. So this is our entry here, then we target 10 pips. So what do you see at a 10 pip take profit? We have an old low here. This is engineered, this is an engineered 10 pip liquidity level, so we target that level here. Then price trades into that level there. So when price trades into that level there, we take our profit. So we sell here, target this liquidity in a 10 pip range if it is the Australian dollar. If it is the GBP odd, we target 15 to 20 pips. If it is zero odd, we target 10 to 15 pips. So when price opens here, let me repeat, we mark the open price, that is our engineered open price. So we wait for the engineered leg that trades into the 1 hour rejection block, then we wait for a market structure shift, then we get our sell entry there and target 10 pips for only the Australian dollar. So this is another example on the Australian dollar or USD. So what do you see here? So this is our opening candle there. So where is the opening price? This is our open price, so we mark that level there. Sorry. So this is our opening candle, so we mark its open price. So if we are to buy, we shall buy below the open price. So with annotations, so you see price at 23, it opens and trades into a 1 hour fair value gap. Remember our PD arrays on the left, so when price opens, it trades into a 1 hour fair value gap. So this move is engineered to trade into this level. So after engineering that move into that level, price will reverse. So from the 1 hour, we drop to the 5-minute. You see, price opens at that level, we trade below the open price into the 1 hour fair value gap. So when we trade into that PD array, we wait for price to shift structure. So when price shifts structure here, we wait for it to retrace, then we can buy. So we target 10 pips if it is the Australian. If it is odd USD, we target 10 pips. If it is a euro odd, you target 10 to 15, then GBP odd 15 to 20. So you enter here, you buy here, you're out, you're done for the day. So imagine if you could do this 3 times a week. What's the consistency there? So you follow the rules, wait for price to open into a 1 hour PD array between this session, then wait for confirmation, structure shift, then you can enter here. So here I have an advanced entry here. So here, this, I would have considered this as my structure shift, but if I want more confirmation, I could take this swing high as my market structure shift, then enter at this level here, depending on my entry model, optimal trade entry, order block, fair value gap, depending on what you want. So you enter here and buy. You go and backtest this. This is not cherry picked. Go to the Australian dollar pairs, only the Australian dollar pairs that I gave you. Backtest this for the last 2 months. You will see what you've actually been missing. So let's go to the sell model. So same thing, vice versa. So we wait for price. So if we want to sell, we mark the open price at 23, then we wait for this engineered move into a 1 hour PD array. So when price hits this level here, we wait for a structure shift on the M5. So when price retraces back after the structure shift, we can sell here depending on our entry model, fair value gap, order block, or optimal trade entry. Then we target a 10 pip range or the other pips that I told you for the other pairs, unless it's odd USD. So remember, we trade only 3 pairs: odd USD, GBP odd, and euro odd. So we can sell at this level here after a confirmation on the 5-minute. So we sell above the open price and buy below the open price. So we have GBP odd case study. So what do you see here? What do you see at these levels here? So between 23 to 230 on the 1 hour. So this is the 1 hour chart. So price opens here. Where does it trade to? That fair value gap there. So let's add some little annotations. So price opens, trades into this 1 hour fair value gap. So when price trades into that 1 hour fair value gap, what do? We drop to the M5. So when we drop to the M5, so price opens at 2300. This is our session of trading. After that, we do not look for that model. So price opens, trades into the 1 hour fair value gap. Remember, we sell above the open price. So once price trades into, we look for the last swing high in this engineered move to this 1 hour fair value gap. So once we break that swing low, that is our market structure shift. So when price shifts, we can sell. So this was our opening price here, the engineered open price. Remember, we trade above the open price. So price at 23 opens here, trades above the open price, then we break the swing low. So after the swing low is broken, we need to sell above the open price. We see a structure shift here, trade into it, trade lower. So this is GBP odd. So if it's GBP odd, I told you we can target from our entry, can target 15 to 20 pips. So at a 15 pips take profit, we have this old low, which is engineered liquidity. So we target that engineered liquidity in a 15 to 20 pip range. So if it is GPP odd, so we sell here, target this level there between this session. Please backtest this. You will see that this is not cherry pick, this is not a gamble, this is something that has been happening every single day on these pairs that I have given you. So we have euro odd case study, so 23.00 to 230. So what do you see? So price opens at 23, we trade higher, then sell. So this is the 1 hour chart. So let's add annotations. So this time we have two PD arrays. We have the rejection block and we have the order block. So this is our order block. You can see the order block, mean, I've marked the open, the mean threshold, and the close of the order block. So price opens, it first trades into a rejection block here. So at this level here, we can buy to that level, or if we miss this, price trades still in the same session, price trades to the mean threshold of that order block. Do you see how price is respecting that level here? So we drop to the M5 with annotations. So rejection block, so our session starts here. So our open price, we trade below it, then into the 1 hour rejection block. So when we trade into the 1 hour rejection block, we look for a structure shift on the M5. So we break this swing high, we have our structure shift confirmed after closing above this last swing high in this engineered move to the 1 hour rejection block. So here I have no fair value gap, so I use the optimal trade entry. So I apply a fib from this low to this high, then retracement 79 level, optimal trade entry. So I buy here at this level there and target that order block, or you target the pips I told you depending on the pair you are trading. So if I miss this here, I have another level here. So we have this price trading into the order block. So when price trades into the order block, we shift structure. So when we shift structure, we wait for price to retrace back into that level there. So when price retraces back and the session is still open, we haven't closed the session, we can sell at that level here because we hit a higher time frame order block, shift structure, and then we wait for price to retrace back, then you can sell there. So when you sell there, you target the pips depending on the pair you are trading. So this is the model. Backtest it, prove me wrong. If you see this is cherry picked, you can tell me. If you actually put this into practice, you will find consistency. So this is the secret to the Australian dollar. Every single day it will give you an opportunity to trade. So it's up to you to trade every single day, or choose to trade 3 times a week, 2 times a week. So let's say on a Monday you get 10 pips, on a Tuesday you get 10 pips, on a Wednesday you get 10 pips. That's already 30 pips. So imagine you could get 30 pips a week and stop. Imagine if you could do that every week, 30 pips a week, you stop. What's the consistency there? Go test it, try it, backtest, and backtest. So that's where the course ends. Thank you.